Hello all, this is Damini, co-founder of VMake Scholars. I welcome you to the 31st episode of our web series Loanflix Season 2. For those of you who are new to my channel, let me tell you Loanflix is a web series which covers each and every detail of an education loan, right from the process, eligibility, sanction, disbursement, repayment, everything. And Loanflix is an initiative of VMake Scholars. VMake Scholars is an organization which is funded and supported by the Ministry of IT, Government of India under their Digital India initiative. And VMake Scholars help students like you or parents like you get an education loan for for yourself or for your kids. And all the services of VMake Scholars are completely free of cost. Now, if you have directly landed on this video and haven't watched season 1 of Loanflix, then I encourage you to watch that first, because in season 1 we covered basic level topics. So if your basics are not clear, you may not understand season 2 videos. So do watch that first, and the link for the same is given above as well as in the video description. Coming to today's video, when you as a parent is trying to manage funds for the higher education of your kids, there are a few things which are very important for you to know. Whether it is about, whether you should take an education loan or not, or whether you should take another type of a loan, or whether you should go for a secured loan or a non-collateral loan, or finally deciding on the loan amount. So I hope by the end of this video you will be able to take all those decisions. So let's start, but before that, if you like our videos or if you appreciate the whole idea of Loanflix, then please subscribe to our channel and hit that bell icon so that you can be updated whenever we publish a new video. So the first question is whether to take an education loan or not. So the higher education of your kids abroad can be very expensive. If your son or daughter is planning to go to Germany or Canada, then it can be in under 20 lakhs. If it is UK, then it will be beyond 30 lakhs. If it is US or Australia, then it will be beyond 40 lakhs. And if he or she is planning to go for an undergrad degree abroad, then it will be definitely beyond 50 lakhs. So when such a huge amount of funds is required, parents generally do the following. Number one, break an FD or take out the funds from the PPF account or sell a property. So if you think that's the right way to do or the right way to fund the education of your kids, then go for it. But from my opinion, exhausting your liquid funds or your retirement savings is not a brilliant idea. Because the thing is, if there is any emergency, medical emergency or any other emergency, if you need a fund or funds or loan, you would have to go for a personal loan or a mortgage loan, loan against property. Both of these loans are given at higher interest rates than an education loan, with no government subsidies, no moratorium period. So it is better to reserve your personal funds for these kind of exigencies, and for education purpose you can anyway get a loan which has no immediate repayment any which ways. The second way is to borrow from your friends or family, which again is a personal choice. But if you're doing this, please ensure that all that money is available in your bank account for at least 1 or 3 months based on that embassy's requirement, because you would have to show this money at the time of visa. Now, other than both these options, I always believe that going for a formal source of borrowing is always a better option if you're planning to take a loan. Now, most of the parents are well versed with loans like home loan or personal loan or gold loan, and many a times they even have agents for these loans in touch. Hence, they tend to go for these kind of loans instead of going for an education loan. But that will be the worst financial decision you will ever take. I will tell you why. In addition to higher interest rate, there are 6 key points which makes a home loan top up or a personal loan or a gold loan a bad choice for funding higher education. The first one is, if you're going for a home loan top up or a personal loan or a gold loan, you would have to take the entire disbursement in one tranche, which means the interest will start incurring on the entire amount as soon as you take it. But in case of an education loan, you can release the money or you can take the disbursement semester wise or year wise, and the interest will be charged only after you take the disbursement. The second point is, in an education loan under section 80E, you can claim the entire interest portion which is paid by you as a tax-free income, which reduces your effective interest rate by 10% to 30% overall. This will not happen in any other loan. When you are spending money on foreign education, please note that there is an additional tax levied by the government on foreign remittance. This is called as TCS or tax collection at source. Now, TCS is only 0.5% if the remittance is happening from an education loan. but the TCS is 5% if the source of funds is anything other than education loan, whether it is any other kind of loans or your personal funds. So even though you can claim this money back at the end of the financial year if you're filing good enough amount of tax, but this additional 4.5% will be blocked in case the source of funds is not an education loan. Government of India has multiple subsidy schemes for the interest waiver of moratorium period in an education loan, such as Padho Pradesh scheme, Dr. Ambedkar scheme, CSIS. I have made a detailed video on all these subsidy schemes and you can check out that video in the link mentioned above. Now, these subsidies are offered because education is a priority sector for the government and such subsidies are not offered for any other kind of loans. Most important point is that in an education loan, moratorium period or repayment holiday is offered. Moratorium period is your course duration plus 6 months to 12 months which is offered to you to find the job. During this entire period, you are not required to start your loan repayment, that is your EMI. Some banks may ask you to pay full or partial interest during this period, but in government banks, even interest payment is not required during the moratorium period. In no other loans such a grace period will be offered, and in all other kinds of loans you will have to pay EMI from the first month itself. In an education loan, the general repayment tenure offered is 10 to 15 years. In a personal loan, it is only 5 years. In a gold loan, it is 1 year that can be extended up to 3 years. So for such a huge loan, a long loan tenure offers you a lot of comfort while repayment. And please note that there is no lock-in period or no pre-closure charges in an education loan, which means you can pay your education loan as early as you can without any additional penalties or charges, whereas all other loans have lock-in period and pre-closure charges. Repeating again, these benefits of education loans comes beyond its low interest rate and processing fee compared to other loans. And please note that the branch staff is always going to encourage you to go for other loans because they have higher targets for other commercial loans and because they do not want to give you a moratorium period that comes by default in an education loan, and because processing an education loan is tougher than other loans. But you as a customer should know that why education loan is a better option for you. I hope now you as a father or mother understand that why education loan is the best option when funding higher education of your kids. Now the next question is, when you're taking an education loan, is that should you pledge a collateral or should you go for an unsecured loan? Now again, this is a very subjective question and the answer depends on a lot of factors. Firstly, are you worried about the safety of your house or any other collateral when you are pledging it to the lender? Honestly speaking, there is nothing to be worried about. Your house papers are probably more safer with the bank than it is with you, and you can still continue to stay in the same house or generate rental income while it is pledged to the bank. The only thing you cannot do it is break the house or sell it off when it is mortgaged. But if you still feel that pledging your house or collateral makes you uneasy while taking an education loan, then there are plenty of unsecured loan options which VMAX Scholars team can support you with. But please note that the interest rate of a non-collateral loan is always higher by 1 to 2% than a collateral loan. So if there is a possibility of putting a collateral, I always recommend you to go for a secured loan. And when you're keeping a collateral for a loan, your kids are going to be more serious about repaying that loan. I mean, in general, when you're taking an education loan, your kids become more serious about the financial planning from day one when they start earning. If you're funding them through your own money, they're never going to have that kind of seriousness towards money matters. So recently I was talking to a parent. He actually came to us for a loan application and he made a fresh FD of 50 lakh rupees and then asked us for a loan on that FD as a collateral. So it sounded a little weird, and I happened to ask him that why did you put a FD and then taking a loan on that instead of giving that money directly towards the kids' education. So what he replied was something very surprising. He said that I want my kid to own it. He should have that responsibility that we are paying for his education and he should recover that money from his job and when he start earning. So if he gives that money directly to the kid will not be that much responsible for such a huge amount which the parent is spending. So he said that in worst case I'm always there and the FD is always there to repay the loan, but the kid will never be responsible if he is not taking a loan. So that made a lot of sense to me. Now, the final tip for the parents who are watching this is that when you're going through this entire education loan process, make your kids also part of it. Make them read the bank's terms and conditions. Only then they will feel confident enough to be able to handle this loan from there on. So that's it for this video. I hope it was useful information for all the parents who are taking the financial decision of funding their kids' higher education. If you have any questions, feel free to put it in the comments below and I'll definitely get back to you. To start your loan process with VMake Scholars, you can request a call back using the link mentioned above. And I'm repeating again, all the services of VMake Scholars are completely free of cost. Our team of financial officers are well versed with the entire loan process and the norms and the terms of various banks. They will handhold you through the entire process. VMake Scholars is funded and supported by the Ministry of IT, Government of India under their Digital India initiative. So now we put a lot of effort in compiling this information and making these videos so that you can be informed. So if you appreciate the whole idea of LoanFlix, please subscribe to our channel and hit that bell icon so that you can be notified whenever we publish a new video. Please like and share this video with your friends and colleagues who might be looking out for this information. That's it. See you in my next video.
Don't forget to subscribe and click on the bell icon to never miss any updates from us.